Good morning. It's Monday, February 3rd, about 6 a.m. Central Time. Looking at the markets overnight, the precious metals, they are lower after last week's surge to all-time highs in gold, followed by traders paring back positions ahead of the uncertainties surrounding President Trump's tariff policies. Looking at a recap of last week's price action and change, you had gold up $26.50, silver up $1.19, platinum rallied $72.90, palladium up $61.50, copper actually slipped down about 3.8 cents, and the gold-silver ratio fell to 87 to 1. Looking at the overnight action Indy gold silver ratio sitting at about 88 to 1, so you do have the silver market slipping just a bit more than the gold market. Now looking at the overnight price action precious metals, the industrial metals, and your setup for the day, the U.S. announced tariffs on 25% of the goods from Canada and Mexico, as well as 10% of those on China. They are set to take effect at midnight here tonight. So Canadian energy imports will face a 10% levy. So if you look at crude oil futures up about 2.5%, that's $1.87. You also have natural gas bumping up here a bit, up 26 cents. That's about an 8% move higher. So looking at what Trump is going to do is that he plans to hold calls with Canadian and Mexican leaders, but you expect no dramatic outcome, and says that the tariffs will go into effect Tuesday without any kind of deal. So the reaction of the global markets, they fell sharply in the overnight trading here. U.S. stock futures, they really plunged. Asian shares, they plunged. The currencies such as the peso, the Canadian dollar, the euro, they are all declining. So those are all slipping about 1%. So you look at the dollar index up 103 at 109.25. I wrote a weekend report indicating what I thought, that it was going to break out to the upside, retest that 110. If you didn't get the weekend review and then also the weekend recap and outlook, shoot an email to info@bluelinefutures.com. We'll make sure we get you on that particular list there. So looking at what traders are thinking on the euros, they think that the euro will reach parity against the dollar due to concerns over the U.S. tariffs on the European Union and the potential impact on the ECB's interest rate decisions. So if you see these tariffs taking effect, what they're going to do is it'll slow down economic growth over in Europe. And they've already been in this situation where they've had to cut rates aggressively. So this might put one or two more interest rate cuts into their pipeline of what's expected. So the euro, it's fallen to its lowest level since November of 2022, and the options market is showing quite a bit of bearish sentiment here, with record amount of puts being put on the market. So the Bloomberg Dollar Index, that jumped 0.9%. The S&P is down again 1.5%. European car makers, you're seeing like Volkswagen really get hit. Remember, they have one of the largest manufacturing hubs in Mexico, and they ship all those cars into the U.S. So expect to see these types of cars and some of the EV vehicles really go up in prices. Now getting into the gold market, quite a wild range last night. Again, on the weekly outlook, I said 2,800 to about 27.95, your critical level support. We got down to 28.02 in the overnight session. The high was 28.61, but if you look at the way the market opened, it spiked up, shot down, spiked back up again, kind of hovering right around unchanged at the moment, down about $2 at 28.33. So something else that was big news on the over the weekend, and I was getting flooded with, was that the talk about silver bars being flown from London to New York on commercial flights over fears of the imminent tariffs. Nearly 14 million ounces of gold, 45 million ounces of silver flown into New York's COMEX exchanges, and it's been going on since the election. So gold, it is commonly flown around here to different hubs, things like London, New York, Zurich, Hong Kong, and Shanghai. Most of the market participants really doubt that precious metals will be included in any of the tariffs, but it's not stopped traders here from positioning for that way. That's why you see JP Morgan, they really shifted the bullion into the COMEX vaults in the event that some kind of possible squeeze unfolds on those metals. They're going to have the metal here to cover it back as far as physically. So JP Morgan, they are the world's top bullion dealer, and they delivered about $4 billion worth of gold against futures contracts for the February contract, which is set to expire here this week. Went into first notice date here on Friday. So if you're trading in the metals markets, you really want to be in that April gold contract. So looking at the gold's technical landscape, the futures, they go through these periods of consolidation and then breakouts. And the last consolidation started on January 15th, where futures kind of bounced off that 50-day moving average at 27.50. Since we've come up here, we made a new all-time high. So traders are going to really look at that 2800 to 2794, followed by 2760. Then it's about 2740 down to 15 is your last kind of resort of a consolidation range. Now looking at overnight price action here, again, your best performing commodities, natural gas, VIX, oats. Remember, oats are imported from Canada, so we're seeing, that's up about 20 cents right now, almost could be potentially a limit move here in the oat market. Your worst performers are going to be ethanol, platinum, the Russell, the Nikkei, and things like that, with, again, the metals right around unchanged on the day. You go to the CME's Fed Watch tool, you'll see that percent of where they were expecting the Fed to cut rates, that's come off quite a bit here. So it's only about a 13.5% chance that they'll cut rates at that March meeting. It's because of the fact that they believe that inflation is going to go up. So if you look at the energy markets, definitely dominating it. You go into what's coming out this week, ton of data coming out, ton of Fed officials. So expect every Fed official to be questioning about what Trump's trade policies are doing and the impacts of the expectations of the interest rate cuts. So we're going to have the PMI data coming out for manufacturing. We're going to have total vehicle sales. We all also have JOLTS tomorrow and then more Fed members speaking. But Wednesday's where it gets interesting because we're going to want to start monitoring trade balance data. So it's expected to be another big decline on the trade balance data and the ISM services, PMI data. We'll have to watch that as well. Oil inventories, that's going to be another thing we got to watch because of the fact that oil prices now are really creeping higher. The 10% import tariff on Canadian oil. Then you get out to the end of the week, it's going to be your focus on employment with the unemployment claims, the challenger job cuts, the unemployment rate, and the non-farm payrolls. So just a ton of stuff out there. Now, if you get to the silver market, that critical level of support, the first major support is down at $30. Consider it 30.03. That's the January 27th lows. And then expect to see some stop losses below that level. We could break down to the double bottom at 29.25. We were working, and if you read the weekend, the weekly outlook, 31.60 was the level that I was looking for a possible reentry, and the low of the overnight session was 31.61. So it doesn't look like any of those orders had filled. So the Japanese yen, it is poking up here a little bit on some of the safe haven concerns. Cryptocurrencies really taking it on the chin, but I think that they're providing some good value at these levels here where they're at, especially on your Ethereum and Bitcoin. They've come down dramatically. Bitcoin down 6%, Ethereum down about 22%, so big sell-off right there. But you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.